Welcome to a pseudo live workshop for Wednesday. Apparently, Zoom and Facebook and YouTube are not communicating properly. So today we're doing what we can to continue to remain in integrity with doing workshop lives every Wednesday. So this, if you're watching this, this has actually been pre-recorded, so it's not actually live, but it'll be in the Facebook groups that we in the Abo group, so that you can review this as you see fit. So, so Carrie, today we're going to actually we had this whole plan and that we were going to do this workshop for a common situation that happens and comes up a lot of times where, okay, I need a moment in time and I'm going to basically draw a line in the sand in my client's books, and I'm not really worried about what happened before that. That's really water under the bridge. And how do we get it to that point, and then we can move forward from there? So, Terry, have you had experiences with prior clients where that's been the case?
Yes and no. So I think this idea and concept we have is really useful. QuickBooks has just a couple nuances that you have to keep in mind. But for a large chart of accounts and balance sheet where it's just journal entries, this is going to be a really helpful tool. The nuances we'll get into with transactions, but the big sweeping balance sheet, this is a huge time saver.
Yeah, so the situation is typically where, a client's going to come to you and they're going to say, take over. And during that discovery phase where you realize that they've just been either hobbling along, maybe they've done maybe they've done a little bit of bookkeeping, but they've been kind of running their business but not tracking the running of their business in QuickBooks. Maybe they've been using QuickBooks, maybe they've been using pen and paper. You're not quite sure, so it comes to a point in the decision point of, do I start from scratch? And, especially if they've had their business for some time, do I need to keeping track of the prior 6 years of the business, or can I just pick up moment in time and then move forward from there? And that's really what we're talking about, is drawing that line in the proverbial sand, and then making an entry and being able to pick up from that point. Now the problem is that balance sheets are by nature, balance sheets carry a running balance from year over year. So in order to make that line in the sand, you have to make an adjustment at that moment so that you can really just everything prior to that, just forget about it and we'll move forward from the moment in time. So that's what we're going to kind of demonstrate, because at School of Bookkeeping, we've made an Excel template available so that you can make that line in the sand a little easier. Now, as Carrie mentioned, there are a few nuances about QuickBooks that you want to, before you just go jumping into, oh, okay, I'm just going to make a journal entry and move forward from there. So the bank balance. So Carrie, you want to talk a little bit about that and what we need to consider before we just move forward with making this adjustment entry?
So it's basically QuickBooks is transactional for certain accounts, as we call them, special QuickBooks accounts. Not that they're special for just QuickBooks, but for example, there's I can never say never, right? Let's say you take on a new client and they wrote checks the last day of the year to get that tax deduction. Their tax return is the line in the sand. They've already gotten that tax deduction, but the check written for property tax that need to be dated 12/31 hadn't cleared yet. So when you're dealing with the balance sheet, I like to do this where you're handling those a little bit different. So you need to keep in mind that it's a good idea to enter in those open items that so that the balance is still tied to here. So you have to do a little maneuvering, but for accounts receivable, accounts payable, and inventory, there's the same thing. Everything else, this method will work perfect. So just keep that in mind as you're creating it. You got to back into it so that
right. So the example is I wrote a check in the end of last year, and it cleared this year. So in order to keep your bank reconciliations in alignment, you have to enter in that outstanding balance, which of course will modify the bank balance before the end of the year. So you want to back into that, just like Carrie said, by entering in those opening balances, and then you want to tie the end of the year reconciliation and allow it to adjust itself, and you want to adjust it to an equity or an asset or an equity, a balance sheet account, so it doesn't actually hit the profit and loss, because QuickBooks is going to want to make that to reconciliation discrepancies, which is an expense account, and then so put it to an equity account, because then when you actually do this process, the adjustment will be washed out through this process, right?
And all this is going to be dated in the line in the sand, 12/31, whatever you're doing, so that when you go to reconcile the bank account, you have a good starting balance. And I have been working real hard on creating courses around how to figure that number out. So then getting into the details of that. So if you want to do those more manually, you can just simply not do the balance sheet for the bank, the AR, AP, and inventory. And you might not even have AP and inventory. It might just be this, being careful with the bank account. But other than that, everything else is a big journal entry, and it's beautiful the way this works. So
okay, so you want to share your go ahead and share your screen. We've kind of set the stage here for this, and we do have of course a blog article that talks about this process in general, and then gives you access to the template that we're going to be kind of demonstrating for you here. But the essential concept is you would run a trial balance in the file that you want to adjust, and send that to Excel. So Carrie's just.
I navigated to because the accountant section of reports is where you find these accounts, and so went to trial balance, and the magic of having it
Voila.
ready to go. Voila.
So whatever that date is, that line in the sand date, that would be your ending date. So that everything as far as every account, and whether it's a debit and credit balance, as of that date will show up, and then you would send that to Excel.
Yes.
So there in QuickBooks Desktop, up at the top, there is the Excel option. We've already taken the liberty of doing that because
sometimes smooth and easy, but it can be done. It just depends on your environment.
So you have Excel open on your local workstation, with the Excel file already in it.
Boom.
Right, and we just send it as a CSV file. If you send it as an Excel file, it actually looks like the report looks the same. But all you want out of this is these three columns. You want the account, the debit, and the credit balance, and not the total. So what Carrie's done here is she's copied that from the export here on the right side, Excel, and then our template that's available at School of Bookkeeping for download will come up here. So if you want to bring that one to the forefront, so we can kind of talk through. So on the left side in the white area, that's where you would paste that information from the exported file out of QuickBooks. Now, this is very simple, simple chart of accounts, so there's not a whole lot of data in there. If you you may have 250 lines, but you would just paste that into the white area so that your account, debit, and credit it is populated from from your exported QuickBooks file. Over in the green area, what the template does is copies the account into that green account area. And then what you would do is utilize whatever you have to go off of to compare. And this could be a tax return, which does have a balance sheet. In most tax returns, you have a balance sheet in there. So you just find the tax return and copy the information from that line in the sand date, whether it was a debit or credit balance. And then what happens here in the middle, where it has debit and or credit, is it gives you and calculates the difference between what is in the QuickBooks file on the left side and what is in the tying to point over on the right side and the green side. And then you would just go down the list, of, what is that? What was that balance for accounts receivable? What was that balance for inventory asset, petty cash, fixed assets, tying all those things together. And then the template is then going to make that, the calculate the amount of the adjustment. So what this template does, Carrie, if you want to bring up the TPI tab, is we've created a template or an output for a journal entry to import into through Transaction Pro Importer. So all you would need to do is basically find your, the balance of the account that you want it to match to, enter that in on the trial balance tab, and then the Excel template is going to do the math for you. And then when you save it, you would import pointing it to the TPI tab. And then it's going to create that journal entry for you, whether you're using QuickBooks Online or desktop. So the nice part about QuickBooks Online is it gives you, Transaction Pro Importer gives you a trial. So you could even do this per company on a trial basis up to 200 lines. So so you can even almost do this for free using it with QuickBooks Online. But if you're using the desktop, you have to purchase the desktop Transaction Pro Importer to do that. But this is designed to work with Transaction Pro Importer. If you're using Satsant or other things, you could certainly copy and paste this into your tool, whatever that happens to be, and be able to import that as a journal entry. Now there's on the template, Carrie, if you want to go back to form.
Oh, form, sorry.
Yeah. When you first bring it up, it's going to give you this form here. You would just put in the company name of what you're working with and the adjustment date, so that it will then put the adjustment date properly on the output, which we just kind of glossed over there.
There you go. So, but yeah, so I just changed it to ABC Plumbing, which is the one that I did, and there it is. So you have this, and it automatically updated that date. You can change that as well. We can make it 2020, the year we want to forget. And as you can see, it updates it for us. And
it should pull it in from on the TPI tab as well. I'm going to bring up the...
I'll bring that up. So,
right, so now the date is already there.
Yep.
So the only thing that you need to manipulate, once it's in the TPI, is if you only need the rows up until there's data, and you don't need rows that have a 0, because it's nothing to, there's nothing to bring in. So you can feasibly just delete those columns or cells, in Excel. You can save this as a separate file so that you don't necessarily, so you always have the template to work with, so you don't have to manipulate it each time. But that's kind of like the high level overview, and we'll put in a blog article that talks about everything that we kind of talked over here today in the workshop, and then access to be able to download it, and you can of course review these steps at any time. Carrie, did I miss anything?
So this copied over the bank and AR and stuff like that. So you can take those out. You just want to make sure everything's still balanced. So
right. Yeah,
mail.
and you can, it's just it is an Excel file. So if you want to, go all the way down to the bottom of the debits and credits column and add your own formula to sum up debits and credits, just so that you have a checkpoint for yourself,
Yeah.
to make sure that your journal entry is in balance in all of the debits and credits columns that are here. You certainly can, if you prefer.
Right.
But it's a great place to start, and this allows you then to create that line in the sand, so that you can forget about the prior years, everything that happened before that. Because if they have filed a tax return, uh, you know if you manipulate or change something prior to that, then technically you should be creating an amended return, and you don't necessarily have to do that, especially if that's not part of your engagement with your client.
Right. So I'm doing
So,
my own math.
what are you doing there?
I'm playing with all kinds of things. I'm trying to get it balanced. So yeah, because my retained earnings it's now off by the 50. But I can also go over here and say I need to add the 50, right? I'm just trying to get it because I took those items out. I'm just trying to get it balanced. So anyway, it gives you a good starting point.
hmm So that's kind of an overview of our trial balance adjustment template, and how to use that to create that line in the sand. Pick up from a certain point, and then just move forward from there, and be able to import that into your QuickBooks, whether it's with desktop or online. So, thank you for joining us for this modified live workshop Wednesday.
We are
Um,
really, it is Wednesday. It's just a little
yeah,
delayed because of the
we're live.
We're
We're
live.
live right now. But probably by the time you're watching this, we are not. Well, we should still be alive, but not.
It's very confusing. You never know
Yeah.
what we're up to, but we're here.
All right, and we'll see you next time on another Workshop Wednesday.
Have a great week.
Bye bye.
Bye-bye.